Hello and welcome along to the industry analysis for the operational case study of August 2019. Here we're going to be looking at the real-world jewellery market, broadly speaking, and then focusing in on some of the more relevant segments within that industry from the perspective of the pre-seen document. Before I get into the nuts and bolts of the industry analysis itself, I want to address a question which is often asked by students, especially students who may be approaching the case study for the first time, and that is, what is the purpose of doing an industry analysis? After all, you are presented with some relevant industry information in the pre-seen document itself, so is it not a surplus to requirements to go into the industry in more detail? Well, one thing I think that has to be accepted and admitted from the outset is that you are not expected to be an industry expert by any stretch of the imagination. The examiners do not expect you to know all of the ins and outs of the relevant industry when you go to do your exam. However, there are some good reasons to do a deeper dive on the industry than the information that you're presented with merely in the pre-seen document, and there are two main reasons for that. So I think understanding the wider business environment and the industrial context in which the pre-seen business operates has two key potential benefits on exam day. Firstly, it helps you to anticipate some of the potential issues that might arise in the unseen scenario and thereby avoid any nasty surprises or confusion. It also familiarizes you with some of the key concepts and some of the key jargon within the industry, and it allows you to read then the unseen information more fluently on exam day if they do make use of any of that kind of terminology. And so that's one of the main benefits, is you become more fluent in the language of the industry, and it makes it easier then to address the issues that come up on exam day. A second reason I think it's important to do an analysis of the industry is that it makes it easier for you to illustrate and apply your abstract theoretical knowledge by giving concrete examples and specifics rather than simply stating your theories in the abstract. Of course, knowing the pre-seen document is key in that respect as well, because it makes you, it allows you to reference specific people within the company, specific areas or departments or products, for example, or facts and figures. But that it's also useful for that reason to look at the wider industry as well, because it'll help you in some cases to give more elaborated examples and illustrations of your applied theories from the objective test studies. So those are two, I think, key reasons why it is a useful exercise to have a look at the broader industry. Of course, some tuition providers might go a little bit into overkill on the industry analysis, present you with too much information, overwhelm you and provide you with big long documents on all aspects of the industry. At VIVA, we believe that that is not necessary. We don't want to overwhelm you. So what we've done is we have distilled the industry to its essential components and to those aspects that are most relevant from the perspective of the pre-seen document. Okay, so let's have a quick overview of what we're going to be covering, and then we'll get into the nitty-gritty. We're going to start off with a quantitative analysis of the market. We're looking at some key figures, some key growth trends, and trends from the previous years, as well as projections for the coming years. And from there then we're going to move into a qualitative analysis. This is a deeper dive on what we've come across in the quantitative segment and try to make sense of those numbers and interpret them and figure out why it is the case that those numbers are as they are. In section 3 then, we're focusing on enameling specifically. If you've already read the pre-seen and you've had a look at our pre-seen analysis videos, you will probably have a good idea already of why enameling is potentially so important. And we'll be looking at it from the perspective of the real world and just giving you a better sense of exactly what's involved there in that process. From there then we'll move on to a real world template, I think, for the pre-seen company. That is ELF 925, and we'll explain why we think this is a good candidate for the inspiration for the pre-seen company. And it's a useful exercise to look at a real world company because it allows you then to compare and indeed to contrast, I think more crucially, with the pre-seen company. And you can see, for example, what they're doing differently and how that might be the future path or trajectory that a company like AKL Sparkle will take in the coming years. Finally then, in section 5, we're going to look at some opportunities and threats. This will be tying everything that we've seen in the previous sections together and giving you a good sense of what kinds of opportunities a company like AKL Sparkle has facing them based on the real world industry, and also some of the threats. And then at the end, we've got a nice little section on sources for you if you want to pursue any of the points that were raised in this industry analysis further. We will have everything that this industry analysis is based on at the end of the PowerPoint for you to look at in your own time if you wish to do so. Okay, so let's get started on the quantitative aspect of the analysis. Here we're just giving you a general overview of the jewellery market globally and where it fits in then within the broader luxury goods market, personal luxury goods market. So that's where we start at the top with the value of the personal luxury goods market. Worldwide, it's 260 billion euros approximately. That is a nice big market indeed. And then within the personal luxury goods market, which includes things like, for example, luxury cars, you also have the luxury jewellery market, and that is worth 18 billion euros out of the total luxury goods market. So not a trivial proportion of that overall market. And then finally, you can see here at the bottom, this is the overall jewellery market, including all sorts of jewellery, not just luxury jewellery, but fine and fashion jewellery indeed, as we saw in the pre-scene. That is the key from the perspective of the pre-scene company, is the fashion jewellery segment within the broader jewellery market. And the global jewellery market is worth a whopping 271 billion US dollars. So that is a very impressive market indeed. Here we're looking at some of the key figures in terms of the segmentation of this market. You can see here on the left, plain gold jewellery, not necessarily the most relevant from the perspective of the pre-scene, but interesting to note nonetheless that global plain gold jewellery market is likely to grow at a compound annual growth rate of 5.37% over the next 5 years. Necklaces and chains here in the middle. This is going to be an important point from the perspective of diversification, as we will see later on in this industry analysis. In 2016, the necklaces and chains segment contributed 31.37% in the global gems and jewellery market. That is a significant proportion indeed for just one segment of this particular market. Almost a third of the total market is necklaces and chains, worth bearing in mind. And then finally on the right here, you can see this is the market in APAC. APAC is an acronym for the Asia Pacific region. Asia Pacific region was the leading region in the global gems and jewellery market, with a market share of a whopping 53.28% of the overall global jewellery and gems market. That is very, very significant indeed. And from the perspective of the pre-scene, that is very important, of course, because we know that the pre-scene company is based in the Asian zone, so it's probably more than likely, you would say, in the Asia Pacific region, and that is a very, very lucrative market from the perspective of absolute value. So now we move into the distinction, I should say, the very important distinction of fashion versus fine jewellery as we came across in the pre-scene. We're looking here at some of the key regions, indeed countries, from the perspective of fashion jewellery. And you can see here on the left, as in terms of retail value, that is to say purchasing of fashion jewellery, China is way out in front. And in terms of its growth rate, it also is very healthy. Looking forward to 2021, an average annual growth rate of 3.5%. But overall, in absolute terms, that is a huge market in terms of retail value for fashion jewellery. And you also have India with some very healthy growth figures looking forward to 2021, 8.4% average annual growth rate. Also, you have in the top 5 here, you've got USA, Japan, and Hong Kong, but it's notable there the Asia Pacific region, and Asia indeed, including India, is very well represented indeed, and that was reflected in the previous slide that we saw. Luxury or fine jewelry, those two terms are used often interchangeably. Much different picture in terms of the retail value markets that are major players. You can see here USA is in absolute terms way out in front in terms of retail value for luxury jewelry. Not surprising perhaps, as perhaps one of the richest countries in the world per capita, certainly in terms of disposable income. You have a lot of people there who are going to be interested in luxury jewelry. You also have places like France and Italy. In other words, you have the mature developed markets in the West, in Europe and North America, primarily responsible for most of the retail value of luxury jewelry. You also have Japan, and China is moving up as well in the rankings. But the general picture and the takeaway here is that for the fashion jewelry segment, as we saw, it's the Asia and Asia Pacific regions which are leading the way. And then when it comes to luxury and fine jewelry, the markets are much larger in the Western countries and in Europe and North America in particular. So now we move on to the issue of brand. This is an important point to bear in mind, especially from the perspective of how exactly the company, the Pre-Scene, is marketing and selling its products. Branded jewelry is on the rise. Branded versus non-branded jewelry. You can see here in terms of the overall percentage of the market, branded is moving upwards and is set to hit 30 to 40% of the overall market by 2020. Unbranded still is a large proportion of the global market, but branded is becoming more and more important. And that includes not just luxury jewelry, but also it includes the branded fashion jewelry that we were looking at in the previous slide. We'll come back to the issue of brand a little bit later on, but here we're shifting the focus now to the online jewellery market, which is becoming increasingly important. The market will be accelerating, growing at a compound annual growth rate of close to 16%. That is a very, very healthy growth rate indeed. Incremental growth, and this is projected to 2022, bear in mind, incremental growth of 17.65 billion. US dollars. The year-over-year growth rate for 2018 is estimated to have been at 15.19%. That is a huge, huge growth rate. The market is fairly fragmented. You can see here at the bottom left, with quite a few players who occupy the market share, as we saw in the pre-scene. 41% of the growth will come from the Americas. Again, that is based on the push from the luxury market, especially in the United States. You have a huge market there for luxury goods. And one of the key drivers for this market will be the innovation in jewellery design and technology. Remember, in the case of the pre-scene, the use of CAD technology in the design of the products for AKL Sparkle. So the online market is going to be very important, and we're going to come back to it a little bit later on. But now we're moving into the qualitative analysis, and we're going to be breaking down some of those figures that we saw in the previous slides and giving a deeper dive on some of the key trends from the perspective of, say, consumer tastes and things like that in this industry. Basing a lot of what follows on a very interesting study, which is linked at the end of this pre-scene, or I should say industry analysis, A Multifaceted Future, the Jewellery Industry in 2020 from McKinsey and Company. And there are 4 key trends that they have identified that I think go some way to explaining and shedding light on some of the figures that we've seen in the previous section. Internationalisation and consolidation is one very important trend which we're going to look at. Fast fashion, based on some of what we've seen in the apparel and clothing industry more broadly speaking, and the idea is that some of this is actually beginning to seep through into the jewellery market. Fine versus fashion, apparently the line is blurring, and we'll come back to that. And of course, as we mentioned in the previous slide, the online market is becoming very important indeed. So we're now going to take each of these 4 key trends in turn and look at them in a little bit more detail. So with respect to internationalization and consolidation, you can see here in the 1980s, national apparel brands were the clear leaders. That is to say, those clothing brands which were specific to a particular country, they were native to that country, and they were the clear leaders back in the 1980s. However, now we're seeing these huge multinationals coming on the scene, such as Zara and H&M. Others have built or expanded their international presence, Hugo Boss, for example, in Germany. We expect jewellery to follow a similar path today. The jewellery industry is still primarily local, but the 10 biggest jewellery groups capture a mere 12% of the worldwide market, and only two, Cartier and Tiffany & Co., these are obviously in the luxury segment, are in Interbrand's ranking of the top 100 global brands. The rest of the market consists of strong national retail brands such as Christ in Germany or Chow Tai Fook in China, and small or mid-sized enterprises that operate single branch stores. However, based on this study, the interviewees expect that a handful of thriving national or regional jewellery brands are likely to join the ranks of top global brands by 2020. So that's an important thing to bear in mind from the perspective of the pre-scene company. AKL Sparkle is confined to the Newland market, but it is an increasingly important player within that market. And according to this analysis, at least, we're likely to see a trend towards consolidation and internationalization as it moves towards the model and the path already paved by apparel and clothing in terms of the move towards fast fashion. And as we saw in the pre-scene as well, the company AKL Sparkle is really keen to churn out a lot of new designs on a monthly basis, and that reflects the growing interest from the younger segment who are looking for new trends all the time, looking to stay ahead of the curve when it comes to fashion and to have something unique and different, and that obviously is very conducive to a fast fashion model. Some local brands will almost certainly become known globally as a result of industry consolidation. International retail groups will acquire small local jewelers. So it may also be the case that the company in the pre-scene is a very attractive candidate for acquisition by one of the bigger, more international players in the industry. Some industry observers project that the 10 largest jewellery houses will double their market share by 2020, primarily by acquisition of those local players. And if the apparel industry does indeed hold any lessons for the jewellery industry, incumbent jewellery houses will soon be fighting bidding wars against large private equity players with deep pockets. So don't be surprised if some kind of scenario like this is coming up on exam day. Fast fashion then, let's move a little bit more detail here on the fast fashion idea. Fine jewellery has so far been immune to the effects of fast fashion, but the same can't be said of the fashion jewellery industry. So as opposed to the fine or luxury market, the fashion jewellery segment is already seeing some shifts toward the fast fashion model, and that is evidenced in the pre-scene by the fact that the company AKL Sparkle is churning out 10 new designs every month, and that's likely to become more important as we move forward and competition heats up. There'll be a larger demand for more and more new designs. An example of acceleration here, Beeline, a German branded jewellery player, is adding hundreds of new items to its assortment every month. So tens in the case of AKL Sparkle, hundreds in the case of the real world company of Beeline, and that's an unheard of pace in the industry where 2 collections per year is standard. So we're seeing that shift towards fast kind of trends, fast styles, as we have seen in the case of companies like Zara in the clothing industry. In the fast fashion world, flexible companies with adaptive business systems reap disproportionate awards. Innovative jewellery players will emulate fast fashion apparel companies. They will react to trends quickly and reduce their product development cycle times. Doing so will require closer collaboration with partners along the entire value chain, from suppliers to designers to logistics providers. This is going to be a very important point later on when we come back to opportunities. What about this blurring line between fine jewellery and fashion jewellery? Well, the previously clear-cut boundaries between fine jewellery, which is characterised, as we know from the pre-scene, by the use of precious metals and stones, and then fashion jewellery, on the other hand, which is made of plated alloys and crystal stones, these lines are starting to blur. For example, fine jewellery used to be almost exclusively a gift purchase, but today's consumers are increasingly buying higher-end items for themselves. Some fine jewellery is available at bargain prices indeed, especially in online retail and second-hand retail online. Chibo in Germany, for example, sells gold diamond rings starting at $99. On the flip side, brands such as Lanvin and Roberto Cavalli sell fashion jewellery for thousands of euros. So industry insiders expect that segments will increasingly be defined by price points and brand rather than purchase and wearing occasions. One of the interviewees in the study put it as follows: "We encourage our customers to layer and mix high and low price points and just go for it to do what they're doing with apparel." In this spirit, actress Helen Hunt recently paired $700,000 worth of Martin Katz jewellery with a H&M dress at the Academy Awards in 2013. So there is a kind of a blurring of the lines. They're not so clean cut as you might think between fine and fashion jewellery. It's not clear if that's actually really spilling over into the APAC region just yet, but it is something to bear in mind moving forward. Online, as we saw earlier, is increasingly important from the figures point of view, but let's look into it a little bit more qualitatively here. In all major markets over the past decade, online sales of apparel have grown at double-digit rates. In the UK, for instance, online sales now account for 14% of total apparel sales, up from approximately 1% in 2003, and that's already surpassed 14% by this year. Our analysis suggests online jewellery sales are only 4 to 5% of the market today, with substantial variations across regions, brands and types of jewellery. Our interviewees believe this number, at least for fine jewellery, will reach 10% by 2020 and won't grow much beyond that. So bear that in mind. For the fine jewellery segment, we're not looking at a huge jump in the case of the online market. However, look here at the bottom. As for fashion jewellery, which is where our company AKL Sparkle is operating, our interviewees predict a slightly higher online share of sales in the neighbourhood of 10 to 15% by 2020. That's because, as we see above here in terms of the rationale for fine jewellery, most consumers prefer to buy expensive items from brick and mortar stores, which are perceived as more reliable and which provide the opportunity to actually touch and feel the merchandise. That seems to be less of an issue when it comes to fashion jewellery, as this is seen as a jewellery that is more replaceable, perhaps a little bit more disposable, and there's the demand again for new styles all the time, styles that can be changed around and tried with different items of clothing and mixed and matched, for example. And in that context, of course, it's not going to be as important for the purchaser to actually see the stuff in person. Seeing it visually online may well be sufficient for their purposes, and for that reason the online segment in fashion jewellery is likely to grow more aggressively than it is in the case of fine jewellery. Millennial, demands are having a big influence on the fashion jewellery segment as well. And as we saw in the case of AKL Sparkle, their target market is in the millennial age range. As millennials are becoming the major consumers but have limited buying ability, fashion jewellery is proving to be a truly outstanding replacement option, allowing them to fulfill their emotional need of looking good all the time and being up to the latest trends and giving themselves a perception of having something unique and that is distinct from what everyone else has. And that is a huge driver of this new pattern and this new push towards a fast fashion model within this segment. We're also seeing some interesting geographical shifts, particularly in that APAC, Asia Pacific region, which is important from the perspective of the pre-seen company. India was previously one of the major exporters of fashion jewellery and silver-based fashion jewellery in particular. The Indian export of silver jewellery and artefacts was a record high of a little above 4 billion in 2016-2017, taking major market share from Thailand. That has since reversed. Silver jewellery exporters from Thailand have made their articles more attractive with contemporary and modern designs, while Indian exporters continue to offer the same style of ornaments, failing to move in line with consumer demand. We're going to see why Thailand is potentially important case study from the perspective of the pre-scene. Thailand's export of silver jewellery jumped 15% to nearly 1.8 billion in the calendar year of 2017 from the year before. Silver jewellery was nearly 44% of their overall gems and jewellery export, and that's very important again from the perspective of the pre-scene. We're dealing primarily with silver-based jewellery. Export in the segment also rose from Indonesia and China, pulling down India's global share. Interestingly as well, jewellery demand is expected to record a solid year of growth in 2019, with Thailand set to be one of the driving forces behind that rise. So Thailand is increasingly becoming a major player in terms of growth and indeed overall market share in the Asia-Pacific region. Now, silver is a key supply in the context of the pre-scene company, of course. And here we're just going to have a quick look at some interesting aspects of the silver market in and of itself and how that could have a knock-on effect then on the jewellery market and the fashion jewellery market in particular. You can see here the top 6 production stage silver mines are based in Australia, Mexico, Bolivia, Peru, Poland, and Mexico. And then down below you see here top 6 near-term silver mine development projects through 2015. These are in the pipeline and on the way. And you can see again Chile, Argentina, Mexico, Bolivia, Canada, and Peru. What's the pattern here? The Americas are a huge player when it comes to silver mining. Most of the major silver mining operations are based in American countries, both North America and South America. Particularly in South America, you've a huge number of countries there specializing in silver mining. One country that I want to focus on here, important from the perspective of the pre-scene company, is Australia. Australia seems to be geographically the closest nation when it comes to exporting silver to a place like, for example, Thailand or the fictional country of Newland in the pre-scene. So that is important to bear in mind from transport costs and so on. Now, silver prices. What is exactly affecting silver prices and indeed the demand for silver? Unlike gold, which is also another commodity, the price of silver swings between its perceived role as a store of value, like gold, and its role as an actual industrial metal. For this reason, price fluctuations in the silver market are more volatile than gold. That's something very important to bear in mind. So while silver will trade roughly in line with gold as an item to be hoarded, in terms of it's called investment demand, the industrial supply and demand equation for the metal exerts an equally strong influence on its price, and that equation has always fluctuated with new innovations. So you can see here, this is a nice breakdown and overview of the different sources of demand for silver globally. You can see jewellery is at 209.1 million ounces demanded versus, you can see here another important player, perhaps the most important segment, is industrial, electronic and electronics uses. That would include things like iPhones and other such devices. They're becoming increasingly important in terms of demand for silver. And then you also have an interesting one here. This is one that I think we would need to keep an eye on, is the photovoltaic. That is to say, the panels used in solar panels. And when it comes to energy and when it comes to renewable energies, this is becoming an increasingly important area, of course, with the climate change and global warming issues and controversies. And so there is likely to be a push towards more investment in solar panels, and that in turn then will put price pressure on silver. As the demand goes up, the price of silver is likely to go up as well, and that then has knock-on effects on companies in all the other segments where silver is demanded, including, of course, jewellery. What have things looked like in recent years? Well, last year in 2018, the silver market faced a very challenging environment, which was reflected in a muted price performance. Preliminary estimates point towards a minor 0.3% increase in total supply, whereas demand contracted 3%. A slowing Chinese economy, coupled with rising US interest rates, an equity market bull run, and global trade tensions, affected the price performance across many markets. This is actually good news from the perspective, of course, of a company like the one in the pre-scene. If the silver price is depressed, of course, that's going to be good for them because they can afford more silver at lower prices. But you have to bear in mind as well what's going to happen going forward. This year, in 2019, we expect the sentiment to be more supportive for the silver market. The start of 2019 has already proven to be good for silver investors. The US Mint, for example, sold 12% more American Eagles in January compared to January 2018. In addition, the expected slowdown in the US Federal Reserve rate hiking cycle should also benefit silver, which in comparison to gold has a very attractive price point based on the high gold-silver ratio at around 82%. So basically, what these analysts are expecting is that the price of silver is actually going to start rising in 2019. It's already at such a low that it's likely to see relatively rapid rises in the price. And so obviously from the perspective of a silver jeweler, this is going to be a bit of an issue if the price rises rapidly in the coming years.